Hey everybody, welcome in to Market Takes. Listen, I know you could have been anywhere in the world, but you're here with me and I appreciate that. Hey, I am Dion Rabouin, reporter for the Wall Street Journal. This is Market Takes. Today, we are breaking down the state of global business, the global economy. We are looking at manufacturing PMIs, those purchasing managers indexes. We're going to start talking about really the US, China, Japan, Russia. We got reports on the manufacturing sector from around the globe. S&P Global puts out this report once a month, and February's report's really interesting, having some very interesting things to say about the state of the economy, about the state of business, shipping, manufacturing. As you know, manufacturing in the US is a smaller piece of the overall economy, but globally, this still drives business. So we're going to be diving into what the state of business is, looking at these purchasing managers indexes, and talk about what that could tell us for the future, not only for the US economy, but the global economy. As you know, there have been some worries about a global recession this year. So of course, we're going to look through the headlines of what these PMI reports tell us from around the world. We're going to talk about what the biggest takeaways are from today's reports. Of course, we're going to check in on the markets. We're going to start with commodities today because those really are the biggest beneficiaries or losers in some cases from what we hear in these PMI reports. We're also going to talk about what this tells us about the chances for a global recession and what this tells us about the state of global inflation around the world, what's moving prices, how they're moving. Really, these reports, they survey business owners from around the globe. They say, hey, how are things going? Are they getting worse? Are they getting worse? Are they getting better? What do you think and what are you making of the business environment? They take those results and they put out a report every month that tells us what the state of global business is. We are going to be breaking all that down right here on Market Takes. So without further ado, the February PMI reports. Now, S&P Global puts out a global PMI manufacturing report, and that came in right at 50. Now, 50 is important because that's the line between contraction. Anything below 50 shows that the sector is contracting, getting smaller. Orders are decreasing, business is getting worse. Anything above 50 tells us that we're expanding, things are getting better, business is moving in a good, positive direction. We hit right at 50 for the global manufacturing PMI report, and that's important because it shows that we are returning to growth. This sector had been in contraction for the previous few months, and now we are returning for the first time in 7 months to that positive 50 number, and we're seeing a bit of diversion, a bit of dispersion in terms of country reports. We're going to talk through that. Output rose for the first time, like I said, in 7 months amid improving supply chains and China's reopening as COVID restrictions were lifted. Business optimism also revived, that's big, rising to its highest level in a year. That is a big thing. Now, the survey number hitting 50, that can be a little deceptive because when people think about the globe, they usually think US, eurozone driven. Well, the US and the eurozone were actually in contraction. The US manufacturer, according to this report from S&P Global, quote, the manufacturing sector remained in steep decline in February. A lack of new orders suggests that production could deteriorate further in the coming months as factories deplete their pipelines of previously placed orders. Now, if you watch Market Takes, you know that a big part of US GDP over the past year or so, really, and going back even a little bit further than that, has been the increase in inventories. Companies buying a lot of stuff that maybe they're not going to sell today, but they're just stockpiling so that if the supply chains don't deliver, they don't run out of product. That's been a big part, and so now we're seeing these PMI reports suggesting that production could deteriorate further as they deplete these pipelines and aren't ordering new stuff. China, on the other hand, saw the first overall improvement in factory business conditions since prior to the Omicron wave, which was last January. This was the best reading for China's PMI, according to this survey, since May 2021. Now, that also aligned with a report from the government. Folks can be a little leery of government reports, but the government report showed that manufacturing rose at the fastest pace in more than a decade. And that was seeing export orders expanding for the first time in almost 2 years. So the government's report, which some folks in business, some folks in the market can say, yeah, China's government manipulates the data, so we don't trust that. But this report from S&P Global kind of confirming those reports, showing, nope, there has been a clear pickup in Chinese manufacturing activity. Manufacturing still a big piece of that Chinese economy. The eurozone, like I said, down to 48.5 from 48.8, but a little bit of a silver lining here for Europe. Manufacturing production volumes across the euro area broadly stabilized in February, ending an 8-month sequence of contracting output. So basically, 8 months output had been clearly going down, down, down. This month, the survey only showed a 0.3% decline. That's the best that we've seen in 8 months, so a little bit of a silver lining for the folks over there in Europe. One not so silver lining note, Germany had one of the worst reports of all countries. Now that's important because it's the largest economy in the eurozone, and because Germany relies very heavily on manufacturing. So a very manufacturing heavy economy is showing a weak report, and that could be worrisome for the overall state of the economy in the eurozone. But again, could be good news on the inflation front. Also, Japan saw the sharpest reductions in output and new orders since July 2020. So things not going great for the US, the Eurozone, Japan, the so-called Western world. When we talk about the West, even though Japan very much not in the West, they're included as part of that. So the US, the Eurozone, and Japan all showing this very defined slowdown, decreasing numbers, Japan especially leading the way down, while China and most of Asia saw increases, a lot of emerging markets showing that increase and a positive response from the China reopening. This was certainly better than expected for China and the rest of Asia. Russia also, this was a big surprise, saw the strongest improvement in manufacturing conditions in 6 years. That's big, a huge improvement for Russia in the midst of this war with Ukraine. Now that could have implications for the war because it could give Russia a bit more cover to continue this war, to keep putting resources toward this war. That could impact the entire world because you could see continued pressure put on some of these commodity prices because there still continues to be trouble or difficulty getting some of those resources that are exported by Ukraine, by Russia in the midst of this conflict going on over there. So definitely something to watch. Our biggest takeaways. Listen, the first increase in global manufacturing PMI since July 2022. We're seeing that also this Chinese reopening has had enough of an effect, and again, China leading the way, even with the US, the Eurozone, and Japan in decline. The reopening in China was strong enough to kind of lift the overall survey to a 50, basically saying that things are improving. That was big. The upturn in production volumes in Asia was led with Thailand, India, and the Philippines all registering the fastest rates of growth. So those kind of big countries, think about China and India, huge 1 billion plus population in China and India, Thailand and the Philippines, not as large numbers in terms of the population size, but big economic centers showing that increase and being kind of the wave that lifts all boats overall for the global sector. Now, this could also mean renewed inflation. Emerging market central banks, some of those places like Brazil, like Russia, Argentina, were the first to raise rates to combat inflation because they've seen these kinds of inflationary pressures before, while the US was a little late and some banks in the Eurozone, the Bank of England, ECB, were kind of late on the trigger to that, and they're still raising rates. Well, some of these emerging market central banks have already been raising rates for years, and they've raised them to some of the highest levels in the world, and now they're seeing renewed inflation pressures and some strong data from this PMI report. That could mean a renewed inflation push across the globe, and that could mean that central banks have to keep rates higher for longer. We know that's not good for the economy. It kind of chokes off growth, and we could see weaker results as a result of this. So definitely something to keep your eye on. Sometimes good news can be bad news. In this case, right now, it looks like good news is good news, but don't sleep. Let's check in with the market really quick. I want to check out, like I said, we're going to start with these commodities because I think those are the most sensitive usually to these country reports, especially stuff from China. We're seeing oil right now, Brent crude and WTI about flat on the day. Now, we've seen a pretty strong decline in oil prices over the past, so far year to date. Oil prices are down, but we're seeing right now a stabilization, and over the past few days, we're seeing a bit of a bounce back in oil. We've seen oil kind of pick up prices. I want to also point you to copper. Copper is having a really big day, up 1.5% right now on the day. Copper is up right now, let me see. Copper up so far year to date about 8.1%. Now that's big. Gold has been holding steady. Oil is down about 4.7%, but China's reopening has been said to be pushing up the price of copper. As they say, Dr. Copper, it diagnoses the health of the economy. That's globally. This reopening from China, folks have said, we don't see it. We're not seeing it in the data. We're not seeing a lot of the stock results. Well, we are seeing it in these PMI reports. We are also seeing it in those commodities prices, with copper up 8.1% and up 1.5% today. You're also across the board. When we go back, when we look at this, we look at what really moves based on some of these reports. Well, the dollar is down about 0.5% today, the dollar index. The euro is up 1% almost against the dollar. Now, as the dollar reduces in value, a lot of those things that are priced in dollars, those increase in value. So this could be an inflation story because it could push the price of some of those commodities up higher as the dollar recedes. We are seeing the euro way higher against the dollar today, and that's probably not based on this report because, as we've seen, the eurozone was down, the US was down, but we are seeing the dollar weakening today. Definitely something to keep your eye on. The stock market is up a little bit overall, reversing course, or at least the Dow is. The S&P 500 is still down about 0.1%, the NASDAQ down about 0.2%. We have seen really a downturn in stocks, and markets really are looking for that next catalyst to move them. A survey like this is much more going to tell us what's happening in the economy than what's going to happen in the market, but we are seeing the stock market kind of start to rebound. The Dow was down in pretty strongly negative before this report came out. We are seeing a kind of rebound right now, as maybe this suggests that there are some good signs in terms of inflation slowing down, maybe the Fed not having to do as much work from this report. Bond prices, of course, we saw the 10-year Treasury yield hitting 4% or a little earlier today. It's back down to about 3.97, and we're seeing yields across the board. The 1 year is up at 5.1%. The 6-month T-bill, 5.15%. Some big numbers on those short-dated Treasuries, those moving higher as well on the day. So let's talk about the impact on the global recession expectations. This report says that overall global recession expectations are probably decreasing. China's fast growth and the pickup, the return to growth after emerging from some of these COVID lockdowns. As we know, China reversed its COVID lockdown policy. For a long time, they had said if we discover even one case, we're shutting neighborhoods, shutting cities, shutting whole towns down. They've said we're not going to do that anymore. We're going to tolerate COVID. We're going to open up some of the borders, make travel more available to people, and we're seeing the impact of that in this global manufacturing PMI report. Recently, the IMF, World Bank, and a number of other economic institutions, they have raised global growth expectations and said they expect to see inflation peaking in the near future. We're seeing, now the other thing they did say, and I want to read you a quote here, the balance of risks remains tilted to the downside, but adverse risks have moderated since October 2022, or since the October 2022 World Economic Outlook. So things seem to be getting better for the overall economy, but the IMF saying we're not out of the woods just yet. Will say this report does clearly show that China reopening is happening. It's not showing big blowout huge numbers, but the impact is very clear and it's very clearly being felt, especially in Asia, which is leading the growth right now. On the other side, recession worries in the US and the eurozone remain very much alive, especially in the eurozone. This manufacturing data could be big. Again, it's a much smaller part of the overall US economy, but a big part of the European economy, especially Germany, the biggest country and the biggest economy in Europe and the economic driver of the eurozone. In terms of inflation, there aren't big worries from this report, but we have seen, of course, the U.S. jobs data. We have seen the CPI data. We've seen CPI data from a number of countries showing inflation picking back up, not moderating as quickly as a lot of folks had hoped it would. This is showing that manufacturing is still growing, and that's not a concerning sign necessarily. But again, central banks want to slow the economy down. They want to choke off the economy. And when manufacturing is still rising, still increasing, folks are still going out there making big purchases, that's going to keep prices going up. So this did not do a lot to kind of dispel the narrative that inflation remains a problem, and it looks like it could be remaining a problem globally and worldwide. Recent surveys had allayed some recession fears, but also further fanned worries of further rate hikes, especially in the UK and US, but also in the eurozone. That's a quote from S&P Global from this report. Listen, here's what comes next. I know you watch Market Takes because you're like, oh, well, that's great. We analyze the data of what just happened, but what comes next? We have no Market Takes next week. I know y'all are sad. Please don't cry. That said, we have a double dip market takes the week after. We are going to be here breaking down CPI and retail sales. That's March 14th and 15th. So no market takes next week. We got the JOLTS report, job openings and labor turnover survey, but no jobs report next week. That's not coming out until, or no jobs report this week, excuse me. Jobs report is coming out next week, but we will not be with you. We'll be with you the following week doing CPI and retail sales. Be with us for that. Consumer credit, that report comes out Tuesday. Be sure and take a look at that. We have seen consistent increases in the debt that U.S. consumers are taking on. And that's something that I think definitely everyone watching the economy should be looking out for. The consumer credit report coming out Tuesday. Listen, that's going to do it for us here on Market Takes. I'm your host, Dion Rabouin, reporter for the Wall Street Journal. I know you could have been anywhere in the world, but you were here with me, and I appreciate that. We will see you on Market Takes next time.